So what makes real estate so much fun for me and what makes the Capital Shift program even more fun as a vehicle for me to explore is we have a good understanding of the person that we're trying to educate, right? So we call him Stuart. Kind of like Sheldon in The Big Bang Theory, I was kind of nerdy and I wrote it where there's two versions of this person. It's the just kind of started their career, got their quote dream job in a I based company, and they're already counting like, okay, like I'm gonna make a real living now. And so they're trying to figure out how to plot their financial future. And then we've got older Stuart who's spent a lot of time, experienced a fair amount of success, has had an enormous tax burden, and is trying to figure out how to balance learning how to offset some of that with not creating another job for themselves. So for you, Tim, why I thought this would be fun, obviously, I don't always know the operator that I'm talking to when we're on the program, but obviously, knowing your background, I think it's as interesting a story about like how Tim ended up where he is as it is what you've learned in the process of making that migration. So, we always risk in turning the
Mhm.
program a bit into like someone's life story. So we'll avoid that piece of it. But before we get to like how your asset class is going to knock the socks off of our compass and how it's really going to get Stewart's attention, let's talk a little bit about like you didn't even start in real estate. You didn't like it wasn't even something like many of us, we arrive at this place. So talk a little bit about
Mhm.
Tim and, like, how you got to where you are, and then we'll jump into the rest of the story.
Yeah. No, it's interesting, looking back. Uh, so I mean, like I'm a fairly conservative person in terms of like, you know, like I came up and like from a very blue collar kind of family, like work hard, get a job, and be safe, and have a family, all that stuff that they say to do. That's exactly how I was, and so it took me a little bit, to figure out nursing. Like I wanted to go into healthcare, but when I figured that out, I was excited. Going to school for it and learning, and then the possibility of the future, like everything was so cool and so exciting. And I went into it. I did it. I got the job, and I was excited, and I was like, yes, like I've made it. I'm here, and I have the stable career, and that's it. And then what was interesting is it left me not satisfied. It left
There you go.
me like wanting more. And what I know now, like I've learned that I am the type of person who craves continued growth.
Mm.
And I'm still conservative, in terms of I'm not gonna go out and do things that are crazy. It's always like, "Okay, I'm gonna do something that is exciting, but, is a tried and true sorta thing." And so, yeah, it's interesting to look back and be like, "Okay, like, I see the path now. I see why I made all the moves." But at the time, I
But you had the courage to say, "This is unfulfilling to me," and I think alright, so what makes the Capital Shift an interesting program to me is, sure, it's about real estate investing. It is. But really what it's about is something you're touching on right now, which is this notion of like, I got here and I thought it was supposed to be the thing, ain't the thing. And so
yeah.
there's a whole bunch of ways to react to it. One of which is the one that you articulated as being the first path you took. Many people will, present company included. But when you get to a place where even that's not doing it for you, the question becomes like, okay, well, like that's not working either. So, like, what do you double down on the negative, or do you say, well, maybe we should look for another way, right? And I
Yeah,
think
yeah.
we all arrive in that place on different timelines, and hell, frankly, some people never do. But for those of us who arrive at that place, typically there's like some kind of inflection point that you say, all right, it's time. Like, did you have one of those like really, really poignant memories that you can reflect on?
So the reason like I initially got into real estate and whatnot, like, I read Rich Dad Poor Dad. I said, oh, that's how people do it. That's how people get rich. Okay, I want to get rich. It was very two
Straightforward.
dimensional.
Yeah.
Yeah, it's straightforward. It's two dimensional. Like, I want to get rich. I don't know what it looks like, but like, why don't I do that? I remember my dad always said, if someone else is doing it, then I can do it. It might be harder for me to do. I might have to work harder, but if someone else does it, then I can. So yeah, that's really like that was the initial thing that got me into real estate and whatnot. But today, today it's always evolving a little bit. So it's still like, how do I keep getting rich? But it's also like, how do I do something meaningful in life? How do I leave things better than I found them? How can I, why I got into mobile home parks because it sounded cool. And again, I want to get rich, but now it's also like, hey, I can make a positive impact in a lot of people's lives. We can provide affordable housing and a nice place to live for a ton of people. And yeah, it's kind of like, I think of the term icky, which I'm probably butchering it, but like to the best of my knowledge, it's, a Japanese term where it's doing what you're good at, doing what you enjoy, doing what the world needs, and doing something that other
It
people will pay
will
you
pay you
for.
for.
And so
Yes.
all of that stuff it's fulfilling, right? It's
Right.
fulfillment.
Yeah. Yeah. There's a great chart that I'll drop that in there. Like it matches up. It's like the smallest of the four intersections of these circles is right in the middle. And when you the lesson I always try to teach my children is job you have today might be teaching you a skill onto the way to the job that solves the problem that you really want to solve in life. And
Absolutely. Yeah.
if it teaches you a skill or develops a relationship or somehow enhances you in your journey towards solving that problem, you should do it, period. And there'll be instances where maybe even it pays you less money or is somehow not as attractive as some of the other options, and you should still do it. Because
Yeah.
if it's going to get you closer to what you really are lit up by, then isn't that really the objective of what we're trying to accomplish? And so, like, I'm glad that you started taking us down this road because I know where the story goes. So it's not that mobile home parks was just like, all right, I ran all of the algorithms and that's the one that got me the richest the quickest, right? So
Yeah.
like what's the stew that allowed Tim to arrive at this is my lane?
Yeah, it's definitely not the quickest. For anyone who's like new and looking for get rich quick, probably real estate's not your lane, like real estate's a good get wealthy slow vehicle, but so, like, the long and short of it for me in mobile home parks is, I heard when I was trying to figure out what do I want to do in real estate, because that's the way that everyone gets rich, right? I listened to Bigger Pockets. I heard Frank Rolfe on the Bigger Pockets talking to Brandon Turner, and he said, I really like mobile home parks because there's, low expense ratios, you got sticky tenants and a few other things about why he liked it and it was I guess just different than what everyone else was doing, which is kind of is just me, when everyone's doing one thing, I'm kind of like, okay, what else is there? So yeah, it just grabbed me and from there I just found a mobile home park for sale and pursued it. Yeah, so it's something about me is I take action on things. I didn't put 100 spreadsheets together because at that time I was really bad at spreadsheets. I'm better now, but there's people in my company who are way better than I am.
Sure.
But, like, so I'm more the type, and what I was thinking at that time was, "Hey, why don't I find one of these and take it down and figure it out? I don't know exactly what's gonna happen, but I know if I do that, I will be better off than if I didn't. So
What's the worst that could
that's
happen?
yeah, well, and yes, exactly, what's the worst? But I don't get stuck with what's the worst that can happen. I'm cognizant of it, I think about it, but I have faith in myself that if something bad does happen, and when it does, and when it has happened, because there's always something bad, I will figure it out, and I have figured it out. And so, yeah, I guess the, "Oh my gosh, all this bad stuff can happen," my natural inclination is like, okay, sure, but what's the best that can happen? And, if the best outweighs that worst, I'll go for it.
So, where was the first one?
About an hour, 15 minutes from where I lived in Charleston, South Carolina.
So, like, just give me, like, it's this big, it was in this condition, like, what were you dealing with? So
No,
you like, "I'm just
no.
gonna go figure it out." You go looking
Yeah,
around,
yeah,
you
yeah,
find this place in
yeah.
just outside of Charleston, and
It was more like it was like, what's there? What's available? So I wasn't like, here's my buy box, because I didn't know back then. I so in the Bigger Pockets podcast, Frank said, "Go check out mobilehomeparkstore.com," and that's his partner's website. And so I went there and I saw, okay, what's around? And there was this small park, a little, around where I lived, and pursued it. And if we're being honest, I'm pretty sure nurse friends that I used to work with were the ones to tell me to check that one out, because I was all excited and telling everyone, "Oh my god, real estate's the thing you need to do." And yeah, so like the friends that I had said, "Hey, we checked out that website. Look, what do you think about this one?" And I was like, "Perfect. That sounds sweet. You guys should call them, and then we could figure it out together." And then they didn't, and then I did. And so I contacted the guy, and yeah, ended up buying it. So that's it. I'm not smarter than them at all. I'm just braver,
just
or
had the
I
balls to do it.
recognize my fear and I move.
I
That's
just
it.
had the stones to move, that's all. Alright, so the rest
Yeah.
is history. There's
Yeah.
a big
Yeah.
long in between, but we don't need to, we don't the Netflix series can cover the life and times of Tim Woodbridge. In the
Yeah.
meantime, we
Yeah.
could let's so now, like, you've been in it for a while, you got 30 of these communities, you got 1,400 pads, you got what was the number? You told me some silly, half 100 mil in assets under management, like some crazy number, right? Yeah, because you think
Yeah,
about it, like,
55,
nothing for nothing,
55.
commercial real estate has all kinds of values attached to it, so, like, when someone says $55 million for other asset class, that might be 2 buildings. This is not that. We're talking about
Yeah,
a lot of
yes.
support that's necessary in order to be able to manage
Yeah.
something of this size and scale. So, start me from the beginning, mobile home park as an investment thesis, like, what's the deal here? What's the blueprint?
Yeah, so I mean, it's not that complicated. It's multifamily, but it's just a kind of niche multifamily, right? So instead of everyone being in one building, everyone is in their own home. Sometimes we own the home, sometimes the tenant owns the home, and they are paying lot rent. So renting the dirt that they're living on, that their home is on. And so yeah, it's very simple. It's your revenue minus your expenses is your net operating income, right? So take all the people who are there who are renting, that's your monthly rent roll minus whatever expenses you have. That's your net operating income. And with commercial real estate, your NOI is what determines the value of the park. So, there's a lot of little levers we can pull to increase that NOI. Either it's slowly going up on rent, or, slowly going down on expenses. Like, we don't do anything super drastic. We're very cognizant that all of our tenants are in need of the affordable housing that we
Right,
provide.
right,
So, like, we'll come in, pave a road or something, or something that's meaningfully improvement in the property, and in the lives of the people. And then, say it's $200 under market, which a lot of times they are, roughly, will go up like, $75 in year 1 after we do some improvements and we go up gradually. And the thing is, like, we're aware it's affordable housing, but if we're not going up on the rent, then we're not able to do all of these things that need to be done for the community. We're not able to do the business plan. We're not able to do like so many things, There's people who are like, it's affordable housing, don't ever go up on rent. And the idea is great. Don't get me wrong. I'm not going to argue that idea. I wish we could. But the thing is, as soon as we don't go up on rent, a lot of stuff starts not being taken care of in the park. And then on top of that, the rents and values for everything around that park go up. And
Yeah,
so your highest and best use for the land is no longer that park. So,
right.
like, for example, there was a park in Somerville, South Carolina, where I used to live the town over. And I was talking to the owners, and they built this park. They knew all the people in the park, and so they didn't really go up on the rent for a while. And I get it. I 100% get it. But the thing is, these apartment developers came in and they said, "We'll give you this crazy price." And I was talking about buying it. And I can't give you. I can't pay that same amount of money because they're going to be kicking everyone out and
Yeah,
developing an apartment. So
right.
the highest and best value of the land is using it. So they wanted to be nice. They thought they were being kind, but likely all of those people are going to be kicked out of their house. So it's unfortunate, but it's true. It's
Well,
something that we're aware of.
and you and I both know if you're looking at occupancy, and this is a this is nerdy stuff, so we'll try not to get too deep in this, but there's a sweet spot of occupancy that says if you go beyond a certain number, high or low, you lose occupancy.
Hmm.
And the
Hmm.
low is the conundrum in a lot of ways because people have this tendency to think what you just said. And it's like, well, no, the people who are wanting that to be a stable, safe place to live don't really want that to happen.
Hmm.
They
Hmm.
they want everything to stay kept up to date. They want security. They want like just because I'm living in an affordable place doesn't mean I should be less dignified in the way I live, right?
100%.
That's
100%.
that's the key. But what most people don't realize is, 1, you can totally tell when you pull in a park whether or not it's prevailing rents or not. 2,
Mm.
if you go ask the people in a place that it's not prevailing rent and you said, "Would you pay a little bit more?" If if the answer 98% of the time is, "Yes, please, can they?" Right?
Yeah.
You and I both know this.
Yeah.
So, like, that's what makes your opportunity to purchase what it is because not everybody follows that strategy. And that's what makes parks lose occupancy, not have people staying there, lose your rent rolls, and suddenly the value of the property is falling apart just because people didn't do the little stuff.
Difference between operating, renting to like as an amateur versus being a professional and being professionalizing it and being a professional company is that we are looking at all the pluses and minuses. How can we make this like continue to make this affordable while also maximizing the not just the value of the park, but the value goes hand in hand with how nice it is. So how do I make this so it's not a shithole, so it doesn't turn into something that's awful? How do I make this so, yeah, maybe everyone, the 100 tenants in this one park are paying another $50, $75 a month. But with that, we can do all these things and make sure that we are paying appropriate mind to the things that people want instead of just letting it go by the wayside. There's a ton of slumlords who just don't care, who just, I'm going to buy it, I'm going to keep raising rent, I'm not going to do anything, or I'm not going to raise rent and I'm not going to do anything because I'm just going to pocket this money every month. And it's like, it takes more than that.
I'm reminded of Joe Pesci, the slumlord. What do we do with the building? Nothing. So, all right. So I'm standing up because now it's time for the compass. We're gonna we're gonna look at the four aspects of what Stuart's always very interested in, which are how long does it take me to get my money back? What multiple am I going to get on my money? Are we going to create any tax efficiency? And what's going to happen in the meantime? So we've got these four compass points, and we always put every operator through the ringer here and like, okay, like, you know what they are. So I'm going to let you tell us of the four which you want to start with, because everybody always wants to start with the strongest. So
No.
go
No,
on,
you
Tim.
you you okay, you pick it. You pick
All
the
right.
first one, and then
All right.
I'll after I'm done with that, then you say the next one because 'cause I'm not
All
gonna
right.
remember them.
So my investment interest is I want to give you money and have you give me back money periodically. How well can you do that for me?
Very well.
Do I get it? Do I get it monthly? Do I get it quarterly? Like how what's the distribution look like?
Yeah, so, we start, monthly distributions, 3 months after we close a deal, so we give ourselves a little bit of grace
But
time to
still,
get
that's
everything
super fast. You're
solidified.
seeing distributions within a quarter.
Yeah, yeah, we don't mess around. I mean, so I love mobile home parks because they cash flow very, very, very well. And so yeah, we're giving you monthly distributions. We've never missed a distribution. And in terms of like total return based on the cash flow and the sale price, we're targeting at least a 2x equity multiple. So doubling someone's money in 5 years roughly. And I mean, if you're going like super nerdy into numbers, which I do like to do that, we're usually 16 to 20% IRR.
There you go.
Yeah.
And there's stewards out there who are as much interested in a metric. So
Yeah,
IRR
yeah,
has a tendency to be that, but you let's not lose track of the fact that so you said we're getting paid quick,
yeah.
and from capital velocity, say again how long the hold is.
So it's a 5-year hold. And so every 5 to 7 years, right? So every deal is its own deal, and it's roughly 5 to 7 years hold. We never say anything about refis because we've seen too many people say, "Hey, we're going to refi and return all your capital in 2 years," and all of a sudden your IRR's through the roof, and then it doesn't happen because interest rates go wherever, or it does happen, they force it, and the deal's no longer, a good deal. So we don't ever project that in our underwriting business plans. We want the deal to stand by on its own. With that said, we're always looking in year 2 to 3, how can we refi and get all of our investors their money back and keep them in the same position in the deal so they continue to win, they continue to cash flow, we win together. That's what makes sense to us. We're very collaborative. We, you know, I'd be lying if I said anything other than I want to treat our investors so, so well that they keep coming back time and time and time again. And that's what's happening.
Well, and so to your point, so we'll call it a window open at year two, could potentially be open as long as year seven, but let's just call it two, maybe seven on the long end, but five most of the time if nothing else happens. Like, okay, we'll count that. But equity multiple, you're saying at the end it might be 2x,
We target a minimum of 2x.
right? So it's that it's, how much do you want? How fast do you want it? This guy gives you both. So if the what you want is good enough to get you to your multiple, then maybe you can live with, because there's another one in here that's tax that we haven't talked about yet. That, remember, it's Stewart is looking at what combination of these things do I want? And a lot of times it's like, have you heard the concept of when you want to buy something, you can get good, fast, and cheap, but you can only get two of them.
Yeah, yeah.
All right. So here we have equity multiple, capital velocity, right? And tax efficiency and cash flow creation. We got three so far. So now you get to throw in, decide, all right, does this one really match all four? Because this is where it's tough to get all four. Tim, you know this. So let's talk about tax and why it's the clincher here.
Yeah, this is my favorite thing, right? First of all, I wanna say for everyone anyone listening who's, like, really, really into numbers and, like, wants to get on a call with us and actually go through the underwriting, we'll do that. I'll get my partner Matthias on, he's better with all that stuff, but we can have no problem showing our math, you know? But anyway, going back to taxes. So, one of my favorite things, mobile home parks are one of the most tax efficient commercial real estate out there. So, every time we close a deal, we do what's called a cost segregation study. And that takes all the parts of whatever asset and then it breaks it down into, okay, is this a 5 year, a 15 year, a 27.5 year, so on and so forth, like in the eyes of the IRS. So, long story short, for people who are giving us investing like $100,000, I'm roughly giving, and plus or minus, but roughly given around a negative $150,000 K1. So it's just like, here, do with this as you will. And
Wait,
like,
wait, 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 wait. Hold on, hold on, hold on. Just so that we don't gloss over. So I'm gonna give you $100,000 of cash,
yeah, yeah.
and
You're
you're
going
gonna
to
give me,
invest it into this deal that
and it's gonna
cash
start
flows and
paying
gets you
me in
equity
3
multiple,
months. It's
all that fun stuff.
gonna give
Yeah.
me some money, a little bit of money in month 3. Down the road, there's a windfall, but you're gonna get, so for this year, I can claim 150,000.
Yeah. Yeah.
Okay, well,
Yeah.
I mean, so what else would there be? Because all right, now, but here's the one though, and we're learning this on the Capital Shift podcast together as a group. What about depreciation recapture? How's that? Like,
You
let's
will
talk.
absolutely have to recapture it. Talk
Okay,
with your CPA. Absolutely. Like it,
so
be mindful of it.
explain what we're
Yeah.
talking about so that the listener knows what it is I'm babbling about.
Sure. So, you say you put in 100 grand, you save 150 and you're negative K1. So when we sell, you recapture that, meaning, you have to whatever pay or whatever it's going to be,
Give it
right?
back,
So
essentially.
yeah, you get that $150,000 that you're gonna have to pay it back in some way or another. Granted, I mean, again, I want to do such a good job that when we sell and when you have this big windfall, you say, "Hey, Tim, you did a great job. I want to put more. I want to put this into the next deal." And I say, "That's sweet because you have negative $150,000 to catch up." And hopefully, I've hit at least that 2x equity multiple. So through cash flow and windfall, you have $200,000. I say, when you, instead of, paying back whatever, and again, talk to your CPAs. I'm not a
Sure, sure,
CPA,
sure,
but the
sure. Like
idea is
this is not
take
investment
some of that
advice.
money. Yeah. Yeah. Take some of that money, put it into one of our next deals, and I'll give you another big depreciation, negative K1. So it's like, it doesn't ever go away, but it's kicking the can down the road effectively. And I'm not smart enough to be like, oh, this is some kind of crazy strategy. I follow smarter people than me who have done it time and time again. And this is how I've come up with it. It's just what seems to work the best.
Well, and from like again for stewards, what Real Wise Collective is meant to do is to teach people. One, you have to be able to consider this as being fact. If you can't do that, then why are you watching?
What are you
So,
doing?
right. So, like, why? So, for those of you who are like, okay, like, there's enough people that I watch talk about this that it can't be fraud, hopefully. But
That's
we,
the worst F word to me. The worst F word.
well, and for me and for you, like, I, I too would feel some trepidation if I didn't have all of the people with all of the credentials that are taking care of the tax bills of people who are far wealthier than you and I.
Yeah. 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 Yeah.
That these are the same people that those people are using. So if it's good enough for them, it's good enough for me. And that's the way
Exactly.
I look at it. And it's like, I'm not out here making up my own deal as we're going. I am following the advice of professionals who have done this repeatedly and consistently and get paid an extraordinary amount of money in order for me to be able to turn around and feel confident enough to say, "Hey, Tim, let's go talk to some people about how we can fix their tax because we fixed our tax bill." So if we fixed our tax bill and you don't see me go to jail, then there's a likelihood that we're okay, right? And to me, we're making sure that part of what we're doing here with you, with anybody else in the operator community that we would ever introduce to someone at Realize, is you're going to have to show your documents. You're going to have to prove that you are who you say you are, or else you're just not going to have access to the community. So, in some instances, people are relying on me to do that vetting work for them. But at the end of the day, it's ultimately up to the person who's going to make this investment to feel confident that one, we've taught you the questions you should ask. Two, we've given those questions to the operators who we might introduce you to so that you can have the answers to what they say they can do. And then it's up to you to decide, what do you believe? What can you inspect? And what would you want to learn more about? And I would say for you, as we get to the scoring episode of this in the week opposite its release, I think you'll be very pleased with your score because it's got the four pillars with weight in all four of them that is hard to find in most of the other asset classes. Because here's Tim, and you and I know this to be true, more so than probably a lot of folks. People will be like, I need tax. I want tax. Give me tax. I got this tax problem. And then you solve the problem and you're like, okay, here's the solution. And they're like, well, does it make any money? You're like, we'll
Ah,
see.
yeah. It's like, yeah, maybe someday.
So this is why, right? So like, let's just, Roger has short-term rentals. Short-term rentals come with enormous bonus depreciation benefits, but it's not a guaranteed cash flow. So maybe it doesn't weight quite the same as this does because in reality, a short-term rental is really just a boutique hotel in disguise.
Yeah, yeah,
This is not that. This is something completely different, right? So by being able to invite Stuart in to learn the difference, what we're hoping is that they'll start to be able to figure out like, okay, this is starting to make sense now. Okay.
yeah,
Like
yeah,
I've listened to enough of these. I've been through the drill enough that like I'm starting to develop my own opinion about what I'm hearing from these operators, right? So as we think about the people who are listening, like what's the optimal for you? Like when you are looking for the optimal investor profile, like give me a sense of whom that person is.
yeah. I mean, someone who doesn't need something flashy, you know, because they're not flashy, they're not fancy, they're not gonna like, rock your socks off and like, oh man, this is a A-class apartment or whatever. It's not. But everyone lives differently and everyone's deserving of respect as a person. I'm not here to judge how anyone lives. I just know that there's a need for it. So yeah, I mean, in terms of our ideal person, it's really someone who wants to grow the wealth that they have, whether that's someone with a ton of money or not a ton of money. I mean, it's all relative, right?
Sure.
So and someone who wants to work with other people and like who is excited about like making a difference on top of what all the other benefits that are happening. So I really enjoy talking with people like that. And yeah, man, I mean, everyone's different. And I love having we have a lot of investor calls and whatnot, and talking with people, seeing where they're at, seeing how we can help them. That's maybe it's the nurse in me, but it's one of those things that's just exciting. This It's not for everyone. Like trust me on that. There are definitely people I turn away just because it's not like the right investment for them. For people who maybe they have a little bit of money saved, but they're looking to maybe get out of their W-2 and they want to buy a business or something. And they're like, hey, I wanna diversify because everyone says diversify. I say, "No, don't listen to that bullshit. Hold on to your money, buy the business, get out of your job, make a ton of money, and then throw some into an investment with us, and then that'll work out." And then, there are just some people who they just don't kinda match with our company values,
Yeah.
It's like they want to, "Hey, I wanna win, but in order to win, you have to lose," sort of thing.
Right.
We don't work with people like that. I
Right.
don't
Right. Right.
care how much money you wanna invest, it doesn't make sense, man. Like, that's not what we do. But other than that, yeah, if your interest is piqued, let's have a call. Let's have a phone
Well,
call.
there's a few. The tagline for Real Wise Collective is passion, profit, purpose. So I think you might weigh a little heavier in the purpose category than maybe some of the operators that we interview on the program. Your background in healthcare, I think, has a lot to do with your empathy and the lane that you chose and the demographic that you're trying to serve, right? So to me, that's all very values aligned from what I know of Tim, right? So when I consider the operator, we say often that you want to love the asset class, but you really want to adore your operator. And
Yeah, yeah.
in this instance, right, it's if what Tim is saying to you about like serving people with respect who may otherwise not be afforded that speaks to you, everything else is elemental, frankly, because you all will align with Tim and WCG on purpose and the profit and the passion piece will follow. And that's not the case for every investor in every asset class, but there are instances where if every other measuring factor is close to the same, if the capital, if the scoring compass, if the numbers are like close, maybe the difference is this speaks to you in a way that one of the other asset classes doesn't necessarily do, so that if there is one last filter you're going to use, it may be, is this more in alignment with what I'd like my money to do for the world? Yeah?
I agree with that 100%, and I've realized for myself, like, if all I'm doing is chasing money, then it doesn't work. I end up personally, I lose money because I'm not into the other aspects of it. And so, I was saying earlier how I got into this to get rich and how like there's so many more layers to it. There's so much more depth to it today. But yeah, I'm super glad to be able to do what we are doing because it's meaningful. Like, isn't that what we're all looking for? That's what I'm looking for, meaning. Like, sure, like the wealth is a positive byproduct, but like creating something better in this world than what we found it. That's man, that is a good feeling. And yeah, you were saying how we treat all tenants well, and the same goes for all of our investors. We're here to help in any way we can. I've got my partner Vinny is our investor relations guy, and man, he's so good. Any kind of issue, anything, we're very of the mind of making this a white glove sort of service. Like, how can we serve? That's the top of our mind all the time, and it really has done us and our investors and our tenants well. In that it's like it that it's not a zero sum game. If we're not all winning, then it doesn't make sense to do it.
I would tell you that it doesn't take someone with a high emotional intelligence to feel the warmth of what you're talking about, Tim, and it's just a reflection of your personality. I know you already to know that, like, this is not surprising to me, but if we were to line you all up, the guests that have been on the program and sort of, like, put a warmth-o-meter on everybody, obviously, you're gonna chart high on the warmth. So, that's
Thank you.
it. That's all, that's everything. For WCG, how if somebody wants to find you, how would you suggest they wanna come see you?
Go to wcginvestments.com. You can book a call or, get on our mailing list, see what kind of deals we're looking at. And yeah, man, we definitely take time, get on those calls with anyone who's interested. Even maybe it's for you, maybe it's not. But, we'll never turn down a Zoom call just to say, hey, hello. And, is this something that might work for you? Is it not? We like meeting people. So let's talk.
Talk. All right. So now I'm going to ask you some bonus stuff. This is for, we have a paid membership version called the Voyagers, and they get like little bonus stuff.
Nice.
So one of the big topics that comes up now in this segment is the notion of mindset. TJ did the episode I did with him. He was just dropping bombs, dude. He's
I bet. I
uh, the worst person you can lie to is yourself. Like, he's because we were talking about routines and rituals and like why it's so important to him and his sobriety, like, like we all have things that are informing our lives that are beyond what we do, and it's more about who we are. And I know that you got a whole segment of this that is your life. So, what I would tell you for me, and whether or not this is where you want to take it or not, like this is free form. You can answer this any way you want. But what I've known of you and the time I've known you and how it's reflecting on your social media is so cohesive.
Thank you.
It's like whatever transformation you're going through, you are in tune with how to tell this story to the people you want to hear it. So I'm intrigued as hell as to what this is all about. So, like, I wanted to give you a chance to talk about it because within the context of like mindset, remember,
Mm,
this is to change what you want, you got to change how you think. And
change
I
yourself
think you,
first.
as well as anyone, has been going through this in a pretty significant kind of way.
Yeah, yeah.
So
In
this is
in
your chance to
different
speak on it, man.
in different ways, in different ways. So, I let's see, I am clean and sober for 5.5 years, a little bit over 5.5 years. So honestly, like besides any other health things, like that's probably not probably. That's like the foundation of everything. It really has helped me to have who I am and my like what I value really shine through. So I mean, when I was using and drinking and all that shit, like that's what it was. And again, that was me getting past the boredom instead of doing something that's interesting. It's just like, why do something interesting when I can just shut my brain off for a little bit?
Yeah. Yeah.
And it has, meetings and everything. It is the foundation of everything that I do. So yeah, I mean that was the biggest thing for me because it's so fucking easy to just turn your brain off. For me to turn my brain off and just, whatever. Oh man, those rich people have it so good. I wish I could do that, but fuck it. Like I'm not gonna actually do anything. I'm just gonna numb myself a little bit. And it's so you know, it it's so insidious. It catches you, or it caught me in like, okay, this was fun, and then it just was a daily habit of bullshit and like,
Yeah. Like
you know,
chains that just get heavier. Have you ever,
yeah, yeah, and
read
just hating myself too, like, man, I'm just a piece of shit and I'll never be anything other than a fucking piece of shit. Yeah, that
might as
was
well just go
very
ahead and do it again. Did did
yeah, yeah.
you did you read The Garden by John Gordon?
No, no.
So in the book, it's a fable. John Gordon's notorious for fables, but he says in there that the devil uses the 5 Ds to get you. And it's doubt, distortion, discouragement, distraction, and division. And when you're distracted, and most of us are every single day, And when you're distracted and you're not focused, focus is a superpower. You and I watch people wear this t-shirt every time we see them. It's very hard to become distracted when you're focused. But if you don't know from a values perspective where you're trying to go, it's very easy to get distracted. And one of the easiest distractions is leisure. And one of the most pro, heavily suggested ways to have leisure is to go get drunk.
Yeah, yeah.
Go get fucked up.
Everyone's doing it. Everyone fucking does it. Yeah,
Everyone. So,
yeah.
I one of the questions I asked you about boardroom. This is a great segue.
Well,
Look
wait,
how
wait,
many
wait.
people in that room are
Before we go
no, it's
wait,
fine.
before we go to that segue, like, I have one last thought,
Sure.
on drinking and whatnot, right? So, sure, everyone does it, and it's so easy, but it's like saying, like, if you want what only, what is it? If you want what the 98% have, do what the 98% do. If you want what the have, don't do what the 98% does. So, sure, everyone fucking drinks, but I know 100% that's not for me. And I don't function like that. Good for everyone else. That's awesome for them. But for me, it doesn't. And I don't want to, I want
Self-aware,
something very, very high level. So,
self-aware.
yeah.
So when you surround yourself, when you go find the rooms with the other people who are doing the same thing, you realize like, shit, everybody quit drinking.
Yeah. Yeah.
Like I look around and it's like 10, 20% of the room has a drink. That's it.
Yeah. Yeah.
And it's like, okay, that's kind of badass. Like to me, it's sort of like it's the ultimate flex.
Yeah. Yeah. I
Like I
agree.
don't have to do that. I don't have to do any of what you people are saying. I can do whatever I want to do and have just as good a time. And listen,
The funny thing is, I always used to say, "I'll never stop because 'cause I'm gonna be so boring," but I was never more fucking boring than I was using. Like, okay, Jen and I got married to Jen in December of 24, and what we did, we spent over a month going on a road trip seeing it was like 20 something national parks. And then a month and a half later, we go and spend 3 weeks in Japan. I would have never done any of that shit if I was drinking, even
sure,
if I had all the money in the world, because
sure.
I'd be like maybe we'll go do something, but it's getting in the way of my using.
Yeah. Yeah. So, like, is there any so for me, 75 hard was what did it for me, and routines and rituals were what reminded me of how to avoid the traps that I get in myself in. Like, did you have something that helped you get to the place, or did you just do it?
I Well, I had meetings,
Yeah,
but
okay, well, like, I mean,
besides that, like building the business and like staying really freaking busy helped me a lot. And I don't stay as busy as I used to be, but like I'm still, yeah, anytime I think of, oh yeah, that's a good idea, because my brain still says, hey, you know what? Turning your brain off, that was fun. And I'm like, okay, okay, like I get where you're coming from, but look where I'm trying to go. And if I did that right now, it would fuck everything up. So it's okay, brain, I get it, but I'm not gonna do it.
do you ever watch you how The Simpsons?
Yeah,
Bart used to say all the time, "Look, brain, I don't like you,
yeah,
you don't like me, so let's just get this over with and I can get back to killing you with beer." And it was like, for
yeah, yeah,
many
yeah,
guys I
yeah,
know, they were like, "Hell yeah, that's exactly right." Right? It's just like, well,
yeah.
maybe there is something more. So, we get in this room, we spend this money, we hang around these people, nobody's drinking. Like, what have you taken from your time at Boardroom? What has been the prevailing, like, if you think about it as a whole? How would you
I
reflect?
like it a lot from like the actual like presentations where you're like, this is where I'm at. These are my struggles because I see my struggles every day and it's right here. And I don't always take the time to take a step back and, just getting in that room and hearing things from other people. It's like, oh, it seems so obvious when you say it, but I would have never come up with that stuff alone. So that's super valuable to me.
I agree. I agree. And the degree, it's like getting Harvard Business Review for an afternoon. You know what I mean? Like, how do you discount what someone says when they're like this world-class operator in their business? Like, "Oh, I'm not listening to you. Like, what the hell do you know?" Like, no, that's not what you're doing here. If anything, I spend a week after we come back, like, making the list prioritized so that, like, I can actually get the really valuable stuff done. Because we come back with, like, a list that's super long, like, "Shit, we could do all of this stuff, but what's, like, there's some real needle movers in here. Let's get her done." And then, like, for me, like, I don't know how it works at your household, but, like, I find myself repeating Kent-isms.
Yeah,
"How you do anything is how you do everything." Like, "Ah, shit, yeah."
yeah,
And the
yeah,
funny
yeah,
thing is for, like, a lot of people in the room, he's, like, their older brother. I'm the same age as him. So it's like my cranky twin brother. You know what I mean? Like, he's
yeah.
like, Rich, how come you haven't done your shit?" I'm like, but
Fair.
it's exactly what I needed. It's exactly what our family needed. It was in so many ways, it was just like and the group and you and, like, us getting to know each other, like, this notion of getting rich with your friends.
Yeah, yeah.
Like,
I like it.
and to me, what we've come to recognize and appreciate is that wealth isn't always money, and
Money's just the first one. Money's
it
the
is.
first one, and then there's so many other things, like, again, meaning and friendship and whatnot, like, money without those things is meaningless.
Amen. Amen, brother. So the last one I'll leave for you is what's your big, grand, audacious, creative vision that doesn't have anything to do with RV parks or mobile home parks?
So, I mean, the big goal, and it's related, but, like, end homelessness in the United States by 2050. So, like, you know,
There. There, now
y
I have it. Now I
yeah,
have
yeah. Well, it's like, people talk about like, oh, well, providing housing and blah blah blah, and people don't want it. But like, there's so many studies where it's like, okay, you have to sure put up a little bit of money to provide housing for all these people, but on the back end, you're reducing so many expenses. You don't have the fucking people coming into the ED because they're homeless and like, like they weren't able to take care of this scab on their foot that became necrotic or whatever. It's a
gangrene.
little dramatic, but it's true.
Yeah.
Um, and they're, able to be positive members of society. And I'm not saying like, there's always going to be people who don't want that, and that's fine. I'm not saying like force people to do anything. I'm saying for people who want it, they should be able to have a place to live because it's just a standard. I mean, we're the richest country, right? Or one of the richest country, if not the richest country. Why aren't we doing something about that? Why are we just fucking talking about it?
So you and I are aligned on this. The tagline for Burnett Property Group is your best life starts at home. You've heard me on my soapbox a little bit about like I have my own vision for what you're saying. The entrepreneur in me tells everyone listening that if you've never heard the phrase problem solvers always make money, then you're not paying close enough attention. And I would tell you that this is the biggest problem our country has today. So
Yeah, yeah,
if problem solvers always make money, and this is the biggest problem we have, then this is an entrepreneurial opportunity in the making. And if I'll just like to land the plane, if we have operators in the class that can solve a problem today, that gives us the opportunity to earn a return while we collectively decide what the return we're making could do to solve the big problem, now we're winning. And if we can take our investments in WCG and keep rolling them and rolling and rolling 'em, maybe someday we are actually solving that problem by 2050 or not. And I'm with you, brother. So let's do it. All right.
love it.
All right.
Let's do it.
That's, and we're just going to land it right there because it's been an hour and that's awesome. And what the hell else do we have to talk about anyway? So I
This is a good
appreciate
conversation.
you.